Good afternoon, everybody, and welcome to the next in the ActivTrades webinar series of Monday Market Matters. My name is Paul Wallace. I'm here today as your guide and host. It's great to have you all here. And today what we're going to be talking about is trading using fractals. All right, quite a fascinating subject in themselves. We could talk about them for days. Well, certainly I could, because I utilize them quite a lot in my own particular trading. But here today, as part of the Monday Market Matters, I'm going to just be giving you a very simple introduction to sort of fractals and how you could possibly use them in your own trading. What should we talk about today? Well, as always, I'll give, for those of you joining us for the first time, I'll just give you a little bit of a quick introduction to Monday Market Matters, which is our Monday afternoon webinar series. We'll talk about what are fractals, okay? Where can we find them on the charts, and how can we trade using them? And then what we'll do is we'll switch across and have a look at the live markets, both in terms of, getting ready for the open of the US markets this week, but also just having a little look at how the education topic for today, how that can maybe basically be employed in your own trading. So as always, we're having recognize that it is we have a broad range of experience of traders who join us for our sessions, from complete absolute beginners to sort of traders who've been trading for a good while. You're all very welcome. There'll always be something here for everybody here to take away and utilize in their own particular trading. And we recognize that these are the English-speaking webinars, but we have a truly global audience joining us, and myself and here everyone at ActivTrades. We thank you for joining us. We hope you're well and safe, and have been enjoying these rather eventful last few months of 2022, and ready for what will be undoubtedly an interesting 2023 ahead. So, a quick question to you all. If you have questions or what have you, you can put them in the chat box there, no problem at all. But it'd be interesting to know, if those of you here joining us here today, how many of you know what fractals are, and how many of you would know or actually utilize them in your own trading at present? So, maybe you're new to trading and you've never heard of them before, and that's absolutely fine. You can put that in. That's absolutely fine. It just basically helps helps me understand, who we have here in the room today. And as I said, if you don't have any idea what fractals are, well, that's why these sessions are on, to help educate you and give you a little bit of insight into, the vast array of trading knowledge that's required to be able to do the best. So David says he does. Yes, that's great. That's a good start. Thank you, David. Right, appreciate that. And as I said, everybody, if you have understanding or knowledge, then by all means, put that in the chat box. So for those of you who don't know me, my name's Paul. I've been trading for a good while. I've traded for funds, traded for high net worth clients. My own focus tends to be on FX indices and commodities. I tend to be a trend trader for the longer term traders, for swing and position traders, and I tend to be a reversal trader for my shorter term trading. And interestingly, what we'll find is that fractals, basically are employed in both my trend trading and my reversal trading in different ways and stuff. And I'll share you a little bit of insight into that today with you. Paul says he has a basic idea of fractals. That's great. I appreciate your contribution. Okay, that helps me, because I'll be able to sort of share with you as much as I can. And also give those of you who have got a little bit of experience, one or two other little gems and stuff that might be there to help you with your own trading. So for those of you joining us for the first time, you're very welcome. Great to have you here. And this is our Monday webinar series, Monday Market Matters. And the whole aim is to help traders start the week in the kind of right frame as we prepare for the opening of the US markets, which is about 20-25 minutes. So each week at 2 p.m. London time, we'll be covering the news, all right, namely that what major news is there to be aware of for the week ahead, which we'll look at in a slide or two. And then also we'll do a good piece on education, all right? So as I say, today we're going to be talking about trading with fractals, a little bit of piece on building your trading knowledge so that you're educated to make better trading choices going forward. We'll also look at some of the tools that are available to you as an ActivTrades client. So, we're looking at some of the platforms like MT4, MT5, ActivTrader, and one or two of the tools that are also available to you, as ActivTrades clients. And then, as I said, we'll finish off looking at the live markets as we enter the start of the US session. I'm going to just have a little look if there are either things setting up or things that you might want to be aware of, right, in the coming particular week. So lots for us to cover. Always plenty for us to discuss, plenty for us to go on, plenty for me to share with you. And as I said, hopefully you'll join us, okay, for the Monday Market Matters sessions. Having said that, this will be the last one of this year, but we'll be back on Monday, the 9th of January, there for the next Monday Market Matters into 2023, and I look forward to you joining me for that. So as always, I'll start off with just by what's coming down the track this week in terms of the news, the economic news. We've got rather, well, you could describe it however you wish. It's a rather chunky week coming down. There's an awful lot of big news that's coming out this week that is well worth traders of all levels and ability just keeping an eye on. You'll hear me say this every week, all right? For new traders, I don't expect you to be able to analyze the economic news, but I do expect you to know when that economic news is coming out, because that can be crucially important. All right, you'll find there's an economic calendar on the ActivTrades websites. There are others available on the internet, so there's no excuse not to just have a quick look. At the start of each week, start of each day, start of each session. Just basically keep yourself aware of when the big news is coming out, because that big news is likely to induce some volatility into the market, and you don't really want to be stood in front of that freight train when the market makes its move. So as I say, you don't need to be able to analyze it, but you should know when it is. That's it's a good element of risk management. It's a good element of being a trading professional in terms of how you conduct yourselves. But as I said, lots and lots of news coming out this week, quite chunky, not unsurprisingly. Lots of people getting the news out of the way before they themselves probably shut up shop for most of the festive period. And in particular, we've had some news here in the UK today about GDP, etc., and that's been rather interesting. But I think for this week, even though there's lots of news coming out, tomorrow afternoon, for us here in, let's say, UK and Europe, we have US CPI data out, and you'll find lots of traders will be keeping an eye on that tomorrow afternoon, because invariably people will be wanting to understand whether whether inflation, or the rate of inflation, is decelerating and how fast it is decelerating, if at all. And then invariably that has a knock-on impact, because I think on Wednesday we will have, I think we've got a UK CPI as well, but probably on Wednesday, what more people are interested in is that invariably we have the FOMC meeting. Okay, the Fed will meet about monetary policy. Most people are baking in the fact that there will be a 0.5% raise in interest rates, but also any different from that will induce more volatility. And also, what, if any, comments Mr. Powell says, people will be very interested in that. So that, CPI data Tuesday afternoon and FOMC on Wednesday are going to be real major news coming out this week, ladies and gentlemen. And I would suggest that they will have an impact not only for the rest of this year, but also probably into Q1 of 2023. So as I said, I don't expect you to analyze the news, but you want to know when it's coming out. Thursday, we've got quite a lot there, as you can read there. There's quite a lot of data coming out, but equally what we have is the Swiss National Bank, the ECB, the European Central Bank, and the Bank of England MPC. They will all be meeting as well. They will all be talking about monetary policy, and everybody's expecting, certainly in the case of ECB and Bank of England, there will be a raise of interest rates, and the question will be, will it be in line with expectations, or will there be changes there, and what, if any, commentary will be made? So, and then we've got a few bits of retail sales data and CPI data on Friday. So there is a lot coming out. It's going to be a chunky week, and as I said, but US CPI data tomorrow, FOMC Wednesday evening, and then, as I said, the national banks, the central bankers for Switzerland, the Eurozone, and the UK on Thursday. They're going to be some of the real major bits of data and stuff. So that has an opportunity, as I said, to move markets and move them quickly. So you want to be aware of what's coming out. So, as I said, we always have just a little reminder of what news is coming out. Check it on the economic calendars. But what we want to be doing is effectively talking about, when it comes to trading and education, is that lots of new traders want to find ways to capture the start of every new trend, right? But the reality is it's very difficult to do that, okay? Very difficult to do that. But what we are looking for, for new traders, for traders who are looking for, sort of easy, simple ways to join a trend, is that what we're looking for is maybe simple mechanical trade setup that will allow them to engage with markets. And what we'll talk about today is about using fractals as part of a chaos theory setup in a simple way for us to join a trend, all right? And I'll just talk about it in a very simple setup way that you can take away, start to utilize in your own sort of trading endeavors. So we will talk a great deal about that. But firstly, we want to understand, well, what is a fractal? So as the slide says there, a fractal, it is a natural phenomenon. It's something that we see in nature time and time again. It's something that exhibits a repeating pattern that displays at every scale, and they are also prevalent within financial markets. So let's bring up the old drawing tool here. So I've got a picture of fern here, and you might be saying, well, what's that all about, Paul? So what we're looking at here is that, and hopefully that, yeah, here we go. So we've got like a little small pattern there, okay? Small little kind of fern pattern. You might actually be able to go smaller than that, which is part of, here we go, a bigger repeating pattern on a larger scale, which actually is part of an even bigger pattern on a larger scale, okay? So those are fractal, okay? It's a pattern that keeps repeating at all levels through nature, and they are prevalent within financial markets as well. So if you don't really know or understand, there's lots you can read about it, but really all I need to understand is it's just a natural phenomena that exhibits at all levels of nature, and it also appears within financial markets. Okay, and that's what we that's what I just need you to begin with. All right, to understand to begin with. As we start to look at it and look at charts and understanding a price, it'll become a little bit more a little bit easier to understand. So I figured that there's lots of let's say academic definitions of fractals in financial markets, and I'm sure you can find them should you wish to pass these long winter nights with great reading material. But I figured I would just cut straight to how it shows itself on charts, because I want you to be able to understand it quickly and understand and take away and see where you start to see it on charts, so you can utilize it straight away. So in a financial market, a fractal is effectively a 5-candle pattern. And you'll hear myself and other traders talk about an up fractal is where, and this is the candle here, and you can see maybe there's a little sort of triangle applet above it, is where the high of this candle is higher than the 2 candles before and also the 2 candles afterwards. Okay, that's what makes up the 5-candle pattern. An up fractal is where the candle is higher than the 2 before and also higher than the 2 afterwards. Just remember, ladies and gentlemen, okay, this isn't confirmed, this fractal isn't confirmed until this candle afterwards completes. Just remember that, okay? Just remember that. So, and that is an up fractal, okay? That's an up fractal. Very, very simple. You've probably, if you're completely new traders, you've probably been looking at these, you might have even seen and recognized these, but you just didn't know what the technical term was or why it happened. But hopefully by this session you will do, okay? But that is an up fractal, and hopefully that's simple enough to sort of see and understand, in this particular context to begin with. And not unsurprisingly, a down fractal, all right? A down fractal is where the low of the candle, and this is the low here, okay? You can see that little applet there, is lower than the low of the 2 candles before and the 2 candles afterwards. Okay, so it's just like almost creating a V. Just remember, okay, it's only when the second candle after completes and closes that we have the confirmation that is a down fractal has been created, right? And so think about it. What has actually happened there? What's occurred? You can understand and see that on a chart, but I want to take you a little bit deeper to thinking about, well, why has that been created? What has happened there? What has gone on there? What is the market communicating to me? All right, because the market is always communicating to you. It's always telling you what it wants to do. It's your job to learn the language. All right, and that's for all traders. Every trader has to go through that, let's say, learning curve, like learning any new language, whether you're learning French or Swahili, or you're learning how to play guitar or a saxophone. Okay, you've got to learn the language of what you're engaged in, and that's the same here with understanding this. Okay, right, in terms of why is a fractal being created? What is it done? Well, if you think about it, price has come down and then it's been rejected and pushed all the way up. So what that's telling me is that in this particular case, in a down fractal, is that there were lots of buyers here, lots of orders, lots of buyers here. Why? Well, sometimes that might be clear. Maybe it's a level of support. Maybe it's a big round number. Maybe it's an area of supply demand. Sorry, maybe it's an order block. Okay, sometimes it will be clear. Other times, not so much. But if you can just understand that a fractal has been formed because prices come down and been rejected and forced away, that in itself is useful information. Okay, it's telling us that for whatever reason, there are buyers there, there is demand there. Okay, and that is useful for us. Okay, as we start to try and build our picture of what is actually going on. All right, what is actually going on within that particular market. That can be very helpful. So it's very simple, first basic understanding. That is, why fractals are formed, and as I said, if you can understand that, that can help you as you move forward. So, remember what we said right at the start, it is something that, occurs at all levels through nature and all levels through charts. So I've put in some very scruffy charts here, a couple, this one on the left is, because of course, it's easy to put up a very nice, simple chart, but the reality is that that's not always the case. So what you will find on the ActivTrades MetaTrader platforms, whether it be 4, whether it be 5, and future platforms that ActivTrades may be bringing on board, is that you'll find that actually fractals can be used as an indicator. But you'll see this like little triangle here, okay? But remember, all that's telling us is that the high of this candle, and this is a pound against the yen monthly chart, the high of that candle is higher than the 2 before and is higher than the 2 after it, okay? That is only confirmed when this candle completes. You can actually see here, all right, this is a down, all right, it's a down fractal, even with this big wick, right? Why is that? It's because the low of that candle was lower than the 2 before it and the 2 after it, but it's only confirmed once this second candle after completes. Here, this is, it's an up fractal. It's an up fractal because the high of that candle is higher than the 2 before, and it's higher than the 2 afterwards that were there. Okay, but remember, it only confirms when the second candle completes. So as I said, if you're a new trader, you might have been looking at these and thinking, oh, actually, I've seen this phenomenon before, but I didn't really know what it was, why it was, what was going on. But hopefully you can start to maybe just grasp the picture just a little bit better. Maybe just the curtains are being peeled back so you can see markets in a new light, okay, especially for those of you who are very new traders. And you've probably seen it, on this is still in the pound yen monthly chart. This was, you've probably seen very simple, V bottoms or V tops, okay. There's the lower this candle was, lower than the 2 before and lower than the 2 after, okay, the real V shape there. Price, for whatever reason, has come down there into an area of buyers, into an area of demand, okay, wherever you wish to label it, and price has rallied away strongly from it, okay. And as I said, that can be useful information for us, all right, useful information just, in terms of just building a picture about, what's going on, where the kind of, let's say, the biggest predators, the biggest buyers and sellers are lurking, and that can actually help us. So first way it can help us is, in terms of our own analysis. And what I particularly always like to see and find is that, this is what monthly chart. This is from what about, but it's just, it's a monthly chart. Remember, as I said, it appears across all levels. So, you will see we have, moving averages on here as usual. My standard blue 20, red 50, green 200. But equally, we can see prices in a trend here because not only are we making higher highs and higher lows, but as you can see, those higher highs are forming up fractals, okay? So we've got, the fractals, our up fractals are higher, our lower fractals are higher as well, until they're not. And actually then what we see is that for a few months, price goes sideways. And what I'm always interested in is, when I see, price cause a level there, but then there is also, when price comes back up to it, there is there is indecision there, right? Price actually goes for 1, 2, 3, 4, it goes 5 weeks before it actually makes its mind up on where it's going. It's eating through the orders. But when we come back to it, well, actually, we can see is that there's effectively, that area is there, there's more fractals. And that is another area that starts to get me interested. When I see particular levels or particular areas, particular zones, okay, where I see that there are lots of fractals formed, a little bit like here as well, okay, that is, I find that, fascinating information. That's telling me that, for whatever reason, There is up here, there are sellers there, okay, up there, there are buyers there, okay. And what happens is when we come back to the area, we can see actually this is very messy here. It's still making uptrends though. It's still making higher highs, higher lows, but there was a reaction at that area. And so with a little bit of practice, and a little bit of just doing your analysis and looking at fractals, when you start to see, as I say, lots of fractals at particular levels, it's just giving you confirmation that that particular level is relevant and important. As I say, sometimes it will be very clear and understandable why that level is important. Maybe it is a big round number, okay, maybe there's just lots of touches of levels of support resistance, maybe it's a very clear order block or area of supply or demand. Other times it will not be. Other times it will not be, and that's part of trading. All right, that's part of trading. It's not always absolutely crystal clear, but if you're seeing lots of fractals around a particular level of point, well, that should just give you an idea that there is it's worth taking note of. All right, it's worth taking note of. And actually when they break, that starts to become very useful, interesting information for us, which we'll talk about in a little bit later. So as I said, in terms of fractals, you can find them on both the ActivTrades MetaTrader 4, MetaTrader 5 platform, and you'll see it also coming on to other platforms. Quite easy, simple thing. I'll show you on the charts in a moment, but not that difficult to find. Okay, you go into the Insert tab, Indicators, go down to Bill Williams, who we're about to come on to in a moment, and you'll see fractals there. Okay, so these are they're built in already. So if you've never utilized them before, you can just add them to your chart. You might see that mine are very faint. Okay, or my normal charts, I'm very faint because my eyes are kind of trained into recognizing seeing fractals. I don't need it to sort of stand out so clearly for me, just a reminder. But if you're starting, you might have those color of those quite bold until you get very kind of comfortable with understanding what's the where they're being printed and why they're being printed. That's the important thing. So as a kind of, let's say, what's so good about them? Well, what's useful? Well, as I was saying there, when you see clusters of them at certain levels, it provides more confirmation that that level is important. All right. Sometimes that will be very clear anyway because it's a big round number. Other times it's not, and so having fractals there can just basically draw your eye to recognizing that that's a level of importance. It's a level at which the market, what you'll hear me call as like an inflection point, namely to level or an area where the market has to make a decision about what it's going to do. And if I can know about that beforehand, that helps me. They can also create channels, both in terms of up channels, down channels, all right, in terms of trends, and also blocks in terms of areas of consolidation. You will find that they are watched by large institutions because they're simple and easy to see and easy to recognize, which means for ourselves is that when they are broken, okay, when those fractals are broken, when price starts closing the other side of those fractals, it means that something is happening. Okay, there is a shift, there is a change going on. Okay, there is, the market is out of balance in the sense of, it might be the buyers are now in control rather than the sellers, or vice versa. So when they're seeing they're broken, something is happening. So we want to be ready. Okay, we want to be able to understand and be ready to take advantage of that. So that's all great, that's all good, and it's a simple indicator that's on the chart. But how can we utilize them in trading? How do we turn it into an opportunity? Well, for that we can start to look a little bit deeper into chaos theory. Now, I'm not going to go deeply into chaos theory here today. Okay, it's a bit beyond the remit of this, but I'm just going to give you a little flavor, a little taster, so that you can understand how it works in terms of fractals and trading. So a gentleman by the name of Edward Lorenz, okay, he was the sort of one of the major scientists thinking about chaos theory in general, but also in financial markets. And they came to he's the chap who came up with the term of the butterfly effect, which you may or may not be aware of. Okay, you'll find that the internet is a treasure trove of information on such things if you wish to delve deeper. But at the ultimate sort of heart of it, in terms of chaos theories, is, as the slide says there, markets are chaotic systems with complex dynamics, yet to a certain extent, okay, we can make some valid market forecasts that they're neither completely efficient nor completely chaotic. And I would find that from my own experience of trading. Sometimes it is very, very clear to me what's going on in markets. Other times I have absolutely no idea what's going on in markets, and that's absolutely fine because they are chaotic systems with such complex dynamics. you're not always going to fully understand what's going on in the market or why that particular market moves. There are times, when I do, when I'm, I feel in alignment, and then I trade well. And then, when there's markets, when I see them just acting chaotically and not really understanding, how they're operating, well, not unsurprisingly, that's when I sit on my hands, okay, trying to sort of, trade my way in markets which I don't understand. It's generally that's a bit of a fool's errand, ladies and gentlemen. So complexity theory give us the answer that markets are complex and chaotic systems, and their behavior contains a systemic and random component. So we can make forecasts, but they are precise only to a certain extent, and that might only be for a few hours, for a few days. And chaotic systems are predictable for a while and then appear to become random. And that's a little bit, like I was saying myself, there are times when I can look at charts and stuff and work very well with what I see or what my analysis is breaking. And then other times it would appear completely random and completely, as if no sort of absolute sort of rhyme or reason in it at all. And that's fine. Okay, this is from me who's traded for many years, because I appreciate when you're a new trader, you might sort of struggle and think that you're out of your depth. It's not. You're just needing to practice your analysis skills. There will be times and places when you understand what's going on, other times there will not be. And my suggestion is, when you don't understand what's going on, sit on your hands. That's the best advice, best advice I can give you. So that's all well and good, and if you want to read more about chaos theory, you're very welcome to it. But when it comes to trading, how do we apply this in our trading? How do we utilize this and make better use of it? Well, we have a gentleman by the name of Bill Williams, okay, who's written 2 trading books, okay, Chaos Theory, Trading Chaos, and New Trading Dimensions, and they are all about combining trading psychology and chaos theory and their effect upon markets. And so, I appreciate it's the festive period. You might be looking for particular festive presents, okay? I've read both of these books many years ago, and I can recommend. Not only will they give you an understanding of chaos theory, but also chaos theory in financial markets, and also how he particularly looks to trade, okay, utilizing fractals and chaos theory. So Bill believed that trading is a psychological game, which I would agree with, and it's, for most traders, interestingly, it is the way of self-realization and self-knowledge. Another thing that I would definitely sort of back and confirm, right? That trading live markets, you will learn an awful lot about yourself, the good, the bad, and the ugly. All right, and you have to be really sort of understand that, okay, understand how that basically sort of works together. Bill says the best way to succeed is to find your trading self, get to know it better, and to follow it no matter what. And that comes from self-knowledge and understanding of market structure. And this is where he uses chaos theory and fractals to give himself an understanding of market structure. And those of you who will know me, those who have sort of spoken to me or worked with me and stuff will know that talking about understanding yourself, all right, understanding yourself is crucially important, and applying that with just a very simple understanding of both market structure, but also simple sort of trading tactics. That is how traders develop and evolve into themselves as the best traders they possibly can be. And that's particularly that is something that all traders will have to work at. Okay, we always kind of work towards that. But when it comes to applying chaos theory in our trading, it's Bill's view that being profitable in trading was about understanding market structure. Now, his way of understanding market structure is that you need to be aware of the market inherent parts, which he would call dimensions. 5 dimensions: fractals, momentum, acceleration, zones, and balance line. And what we're going to do today is, for the rest of our session, we'll focus on fractals and the balance line, because that's something that we can take away and utilize in our trading from tomorrow. All right, and that's a good starting point for, let's say, for new traders who are looking to find, simple mechanical ways to engage in markets and join a trend. So, if you want to include, all of the other elements, the indicators, the momentum, acceleration, and zones, etc. If there's interest, well, we can do it as a future session for Monday Market Matters into the new year. But today we'll just focus on fractals and balance line, and that's enough to get a trader started. So if we're going to talk about the balance line, well, then we have to talk about enter the alligator. All right. So I appreciate if you're new to trading and new to understanding chaos theory, that might not be understandable. But when it comes to the balance line, Bill Williams uses a series of indicators which he describes as the alligator, and it's the alligator as being like a compass which keeps you trading in the right direction. And you might be thinking, well, that's all well and good, Paul, but what does that actually mean? How do I actually utilize that in my trading? So the alligator is the combination of three balance lines. And you'll see on my chart, green, blue, and red. The blue line is the alligator's jaw, which is, you can read there's the 13-period moving average at the mid price, which is offset 8 bars into the future. But really, today, all you need to know is that the blue line is the alligator's jaw. The red line is the alligator's teeth, which is an 8-period moving average at the mid price, offset 5 bars into the future. And the alligator's lip, all right, is a 5-period moving average mid price, which is offset 2 bars into the future. So if you want to understand exactly how they are created, that's how they are. But to begin with, all you really need to understand is, how is the alligator made? The alligator has got the blue line, which is the jaw, the red line, which is the teeth, and the green line, which is the lips. So once again, that's all well and good, but what does that actually mean? Well, when all three lines are intertwined and with price action, what we define is that the alligator's mouth is asleep, and that means the market's range bound. When the alligator sleeps, you want to stay flat. But like a real alligator, the longer it sleeps, the hungrier it gets. So, you can see here, those balance lines, see how they're all intertwined, okay? They're intertwined, they're all very close, as is price. And what do we see also? Lots of fractals, isn't it? There's lots of fractals, okay? This is range bound. This is a period of consolidation here. Look, just remember what's happening. Price is just basically getting bounced back and forth, okay? This is, some people would call this, a period of accumulation, all right? Depending on that. Others would call that a period of consolidation. As I said, how you choose to label it is, I'm not entirely, worried about. It's about understanding what is actually going on there. What is going on there is that, the alligator is asleep because the market is range bound. When the market's range bound, we're not really interested. We don't really particularly need to have a look at that. We don't really, care too much about that. Okay, we just basically want to sit on our hands. We want to stay flat. We don't want to try and get involved in that. So that can be, for new traders, that can be very helpful just to give them an idea of as to recognizing when markets are range bound, when markets are going sideways, when there's actually nothing for them to do, which for some traders is actually you find is actually the hardest thing, to actually sit on their hands and do nothing. On the flip side, okay, once the alligator wakes up, well, we start to see the balance lines start to diverge. They start to separate. The alligator has started hunting, ladies and gentlemen. All right. So we only look to trade when the alligator is hungry and its mouth is open. Remember, we've got the lips, the teeth, and the jaw here. Okay. Just think of it like, not unsurprisingly, like an alligator opening its mouth because it's getting ready to feed. Okay. This is hopefully starting to make a little bit more sense to you, ladies and gentlemen. Okay. How that is effectively working. So you can see that there, okay? You can see that basically that when markets start to get into trends, all right, you'll see that the alligator's mouth will start to open up, and this is what can help us, all right, in terms of being able to sort of start to get involved with a particular trade. So let me just clear this and we'll go on, have a little bit more of a look into it in terms of depth. So, as I said, you might be interested to trade it, okay? And I said you can find all of the indicators on the ActivTrades MT4 and MT5 platforms, okay? So they are all there. You don't need to all of the indicators there, but really all we're looking to start with is to, as I said, you're looking at fractals and the alligator, and it will actually already set it up for you, all right, which is fabulous. As I said, it's already set up in MT4 and MT5, and you can see there, you can see the setups there, and and I'll show you how it is when we move across to the charts in a moment. But the important thing is that when the alligator's mouth is open, that is when we want to trade, and we can utilize that those balance lines, the alligator and fractals, to actually help us, all right, in terms of starting to get into a trade, and that's what we want to look at, focus on. So how do we do it? What are we looking for as a trader? So let's get the old drawing tool up here. Firstly, all right, we're looking for the alligator to awaken. All right, so when that's the important thing. You remember what I was saying is that, you know, when price is a little bit and the alligator is just basically intertwined, we can leave it. But once we start to see, okay, that the alligator is opening, well then, you know, we're ready to trade. And what we're interested in is when price breaks the previous fractal, we trade in the direction of the break. So in this case, you know, the prices move down, and you see it actually goes a little bit sideways there, doesn't it? It goes a little bit sideways, okay. You know, it goes a little bit sideways before, and price comes back up into the alligator, okay, you know, and then actually it's here, okay, it's here when price when price breaks, okay, price breaks that previous fractal, the alligator's mouth is open. We are looking to basically trade in the direction. So, you know, we'll be going short here, and our stop loss goes at the teeth, the red line, okay, goes at the teeth. The teeth, let me just clear this down, the teeth also becomes the trailing stop loss. So as this trade particularly moves in a good trend, okay, we would move our stop loss in line with the teeth, okay, in line with the teeth. You know, and we will do that, okay, until we're taken out, okay, until we're taken out, which in this particular case is down here, okay, is down here, it's down there. So, and then what we see is, you know, a bit like nature, you know, once the alligator is fed, well then basically it'll go back to sleep, as will on the charts, okay. Once the balance lines all start to get intertwined with price is going sideways, price is going range bound, we want to leave it, let it go, all right. It's as this space, you know, we're just looking to try and capture, all right, okay, a nice piece of the trend. That's what we're looking to do. That's what we're, you know, as new traders, just looking to find a way that you can simply catch a new trend and stick with it, okay, and stick with it. And this is quite simple, quite systematic, okay, which sometimes for new traders it helps them because, you know, it's easier. Sometimes they can be a little bit overwhelmed or intimidated or confused, whereas if you're just using fractals and the balance line as a way to start, that in itself can be a helpful way, and you also know where your stop loss is going, and you know you don't actually have to do anything, okay, unless just moving your stop in line with the teeth, okay, with the red line. That's what we're interested in. Okay, so you know, just the examples here, you know, and the thing about using the fractals and the balance line, okay, the alligator, is that, you know, it can be utilized across all sort of time frames and all instruments. My suggestion is that, you know, you start off on the kind of higher time frames because you get time to do your analysis, time to work out, you know, where your entry is, where your stop loss, do your position sizing, okay, and you have time to do to that. So if you're on 4-hour, daily, weekly, monthly, even charts, right, you can do that, as opposed to, you know, trading very, very short time frames. Things are happening very fast. My suggestion is, you know, start at the higher time frames, and then, you know, that's a good way to start to work. So, you know, what we can see here, cable, pound against US dollar, 60-minute chart. It's actually, see how the fractals are just telling us price is just going sideways there, isn't it? And then, you know, we've just seen price and the moving averages, they're just a little bit intertwined there. But we have a fractal here, we have a fractal there. And what we see here, remember what I said earlier, is that when we see a fractal broken, a shift is occurring, something is happening, all right, and we want to get interested in that. And so price has broken above the alligator, okay, and now what we're starting to see is the alligator starting to open its mouth, isn't it? It's getting ready, okay. Here it's asleep, now it's getting ready to feed. And so what we're looking for is, you know, once that happens, you know, personally what I like to see is that, you know, I like to see price pull back a little bit, okay, and then I'm very happy, right? You know, once we've got the a nice bullish candle in this case, we've got the alligator is opening its mouth, we know that we can just basically be looking to buy that market. Remember, our stop loss goes at the teeth, at the red line, and then invariably what we're doing is, you know, once that trade is on, that trade like this particularly goes in our direction, well, all we're looking to do is to just basically to trail our stop. And you're trailing your stop, okay, on the teeth until it is taken out here, which is a very good, it is absolutely, that's a great run. Now, admittedly, lots of traders will be saying, well, Paul, you gave all that back. And that is absolutely true. And that's the welcome to trend trading, ladies and gentlemen. All right, you will never be able to pick the exact tops and bottoms, or rather, you are. If you do, it's more like through luck than judgment. When you're trend trading, you are never going to capture every pip. It's trying to get blood out of stone. It's a pretty pointless endeavor. Remember what I said earlier is that we're just trying to get a good part of the trend, okay, when it does play out for us. And that's what helps us. And what we can start to see is, you can see that that price is doing that, and then price starts to break these fractals, doesn't it? So you're already getting a hint that that trend is probably coming towards an end, and then it hits the basically it hits the teeth. Okay, the teeth is lost, and then actually price and the balance lines, they get intertwined again, don't they? The price goes to sleep before it breaks down here, but we're not terribly interested in that, okay, because at that time the price is just still intertwined, okay, even though it's moved fast. We don't chase markets. What we want to do is just to see nice setups like this, where we can basically see that the price has been nicely intertwined for a while, though. The alligator's been asleep, and then basically the alligator starts to wake up, and when it wakes up, it's hungry and it wants to feed, and we just want a piece of that. That's what we're looking to work with. So another little bit of example before we switch across to the charts. So this is the kind of the dollar against the Canadian dollar, US dollar against Canadian dollar, and it's a 4-hour chart here, okay. And what we saw here at the start, okay, on the side is that yes, there were fractals, but price is intertwined, isn't it? Price is intertwined until it breaks, okay, and we start to see also it gets intertwined, okay, it's getting intertwined. And so we're looking to buy as we start to see the alligator open up. We've broken the last fractal, and we can run with it until we hit the stop, all right, until we hit the teeth. And as I said, you start to get an idea of this, is that as you can see, the down fractals are here, the down fractals there, right, and then we're breaking it anyway. Okay, so you've got the down fractals getting broken at the same time as hitting the teeth, so it's already telling you that trend is probably over. And actually, the market does drop. It drops very strongly, but it's not giving us a trade setup that we want. But what we see is price pulls back, starts to go sideways. Okay, but if we look, and let me just clear this down to help us, is if we just clear, is here we can see price and the moving and the balance lines are all they're all intertwined. We hear the balance lines, they're still in the proper alignment. Okay, we've got the lips beneath the teeth, beneath the jaw, and actually once we break that last fractal here, okay, we can be short in the trade, our stop loss going at the teeth, and then basically as the price runs, okay, we just trail our stop. Now we're probably already getting an idea here. See how you've got 3 fractals there at a particular time and place. So we're already probably expecting that the trend is coming towards an end. It has one last flush, and then what does it do? Look at how the fractals are telling us that price is pulling back up. Okay, we're making now, okay, higher lows, and then bosh, we hit. All right, we hit our stop, but we've still taken a nice part of that trend, okay, a nice part of that trend, okay, and we have a very quick turnaround here, but we don't really have any fractal breaks, okay, to give us in there. And that's what happens. You're never going to capture every trend. You're never going to capture every inch of every trend. That's just the nature of trading. What we're looking to do is that when we are in a good trade, okay, we'll be able to sort of to trade with that trend, okay. So this is the very the basic version of it, just using fractals and the balance line. But sometimes for new traders, that's actually helpful, rather than having lots of additional indicators on, because invariably it's less is more. I'm a true believer that less is more in terms of understanding how a market moves and being able to make good trading choices. As I said, we're just trying to surf the best of a good trend. Okay, that's what we're looking to do. All right, when invariably the alligator gets up and is ready to feed. So before we switch across to the charts, just to conclude, okay, we'll have a look at the live chart. Markets are chaotic systems with complex dynamics. This allows chaos theory to work well. Okay, they work well in such environments. Bill Williams in his books explains chaos theories and how to apply it. As I said, they're two good books for you to read. And that's where he's talking about combining trading psychology with technical analysis, which any of you who've traded for long enough will realize that technical analysis is fine, but it's actually how you apply it, and how you apply it is down to your own trading psychology. So what we do is we utilize fractals as the first dimension of technical analysis, right? And we use those fractals firstly to analyze those markets, but also, when we see them breaking, that is when we start to get interested. We can use the balance lines or the alligator as the final dimension. Both the fractals and the alligator can be found as indicators on the ActivTrades MT4 and MT5 platforms. And what we just need to know about the balance line is that, when the alligator is asleep, the lines are intertwined and we stay flat. You do nothing, all right? It's when the alligator is hungry and looks to open its mouth, all right, and break the fractals. The alligator is looking to feed, and that's when we're looking to trade, ladies and gentlemen, all right? So keep it simple. We don't need to overcomplicate things. I see lots of traders overcomplicating their trading methods, and I have been guilty of it myself, all right? And men in particular, we think, well, it can't be this simple. It needs to be more complex. We don't need to. We already know markets are, as it says, chaotic systems, and they're complex enough as it is already, okay? What we need is just a simple way that you can actually engage with markets and trade markets easy, time after time after time. So before we switch across to the charts, just if you need to contact ActivTrades, you can call the English desk there on the 0207 6500 567 number, or email them englishdesk@activtrades.com. If you've got questions about this, if you're watching this later, okay, on demand, or you've got suggestions that you'd like to see me cover in the education section of the Monday Market Matters webinars, well then by all means give me a shout and I'll be very happy to do it. We appreciate the feedback, and we want to make these sessions as useful and as valuable for you. So if you've got thoughts, concepts, just drop an email there, englishdesk@activtrades, and I'll be very happy to pass on that feedback and insight to myself. So if you just bear with us a moment, what we'll do is we'll switch across to the charts, have a little look at what's going on with the market starting today, and we'll also have a little look at, we'll have a little look at the sort of the fractals and the alligator, okay, and see, how that's been playing out. So just bear with us one moment, and we'll switch across. Okay, so what I'm actually going to do is, we've got about 10 minutes. What I'm going to do is let's have a little quick look at some ideas, okay, on terms of the alligator. And the kind of fractals, and then what we'll do is we'll have a quick look at some of the big charts, the big indexes, okay, just to give us a little bit of insight as to what's going on, because as I said, it's going to be a bit of a chunky week here. So I'm just looking at this as just a chart on this is the Kiwi dollar against the US dollar, undoubtedly. Let me just bring up the old drawing tool here. Undoubtedly, you can see that, we were in a very clear trend there, weren't we? And we can see that basically the alligator's mouth was open, wasn't it? The alligator's mouth was open. And so invariably what you're looking at is, every time a fractal is broken, okay, well then invariably, what we're looking at is being able to sort of trade that, okay, trade in the direction of the break. You stop going at the red line, okay, the alligator's teeth, all right? And then, we start to see it maneuver here. You probably maybe get a little bit taken out there. You might be touched out there, okay? But if not, you're definitely taken out here. And that's not a surprise, because actually what we can see is there's fractals there. We're now starting to get this fractals higher than this one. Okay, there's a little bit of, the fractals are starting to get a little bit messy there, okay? Before what we start to see is the price actually turn around. We actually have a false breakout here. And then what we see is that, what we're seeing here is, there's a fractal printed there, and the price is now, what we're seeing is actually the alligator, instead of going closer, clearly the alligator really wanted to feed at this time. And what we can see is, as I said, it breaks it here and comes back down here. As I said, I like to see a little bit of a maneuver, and then we get a very bullish candle there, don't we? With your stop basically at the red line, all right, at the alligator's teeth, and that is, well, that's still running, okay? And for those of you who are very, let's say, aggressive traders, fractals can be used at every time they're broken. That might be an opportunity to add to that trade. And that's something that Bill Williams goes into in his chaos theory book. As I said, I'm just covering two of the dimensions, fractals and the balance line. There's much more to it, okay? So if you wish to learn more, I suggest to have a read of those two books. But, for new traders just trying to get into a trend or trying to identify a trend, even just using fractals and the alligator is a simple way to start on good trends. And as I said, This is Kiwi dollar against the US dollar, and this is on the daily chart. And as I said, doing it on like longer time frames gives you a little bit of chance and time to do your analysis. You're not getting sort of bounced into making fast, quick decisions. You can do your analysis, work out your entries, work out your position sizing. You only have to look at it for a couple of minutes every day just to check how your trade is playing out, and if you need to move your stop loss based on the sort of the alligator's teeth, and that can be a very good way for new traders to begin with their particular trading. So that was just a little bit of one example that's just going on right at this moment. Okay, we kind of like to see how that's particularly playing. So David asks, do you open a trade at the break of the range or the body of the candle? That's a good question. So my suggestion is for new traders is keep it simple. All right, keep it very simple. So what I would normally suggest is that if you're getting a once the candle's closed, you're wanting to sort of trade the kind of the break of that candle in that particular route. If we know in this particular example, we want to be a buyer. Okay, we know that price is above the alligator and the alligator is open, so we know we want to be a buyer. Is that actually as price breaks the fractal, comes back a little bit, and then basically as price breaks through, right, you can either break a candle, right, or move forward. More advanced traders might look to sort of trade pullbacks in candles, but that's probably outside the remit of today's session. That's kind of let's say more advanced entry tactics, which we can talk about in the new year. But to begin with, David, I would say just trade the break of the candle, all right? Break of the candle, break of the high, all right? So that's if you're going long, or a break of the low of the candle if you're going short. Let's keep it simple to begin with, all right? And that's the way we look to operate. But that's a very good question. That's a very good question there and stuff. Sorry, Peter's asked. You've asked a couple of questions there, but I'm afraid I don't really understand what those questions are. They seem to be something a bit different. So you might want to drop an email to the English desk at ActivTrades.com. They may be able to help you, but that might not necessarily be the case. So here we go. Let's just do that. Let's have a little look at what's here before we do. So. Yeah, so this is kind of a bit of a messy chart here. So I think sometimes it's good to do that. You don't always have picture perfect examples here. This is an example. This is the 30-minute chart on the Aussie dollar. And what we've had is, well, if we look at it actually starting off overnight here. Let's just bring it. We had overnight is that you can see that the price and the things are intertwined, aren't they? Okay, which is just a little bit messy, but it breaks out of it. Okay, we break out of it, and then we start to see basically the jaw starts to open up. So what we're looking for here is if we're not already long, we know we've broken that fractal. But what we're looking for is that way to basically the market's showing as bullish. There's also a lot of morning star formation there, okay, which we've covered before on Monday Market Matters. You might want to take a look at that. And breaking into that with our teeth, with a stop loss at the teeth, okay. And you can see that actually, in the sort of Fridays and into the session, we ran until that basically closed, which is not a massive surprise, really. In fact, you'd have probably been taken out there this morning, I suspect, but not a massive surprise. That's still kind of a nice kind of run in terms of understanding the maneuver. I appreciate that we have traders on a global scale, so traders in Europe might not have been trading this late in the day, but traders here joining us from the Asian session, right? They would have been happy with that, working with that. And what we can see is, let's just is that we can see that price drops down, but price here. Let's quickly get the drawing tool. This is just messy around here, isn't it? It's just messy, okay. That's what we can see there, okay, is that and that is basically what there is the US markets, okay. And that's the US markets open. I think that will have been on Friday's session, okay. I always say, there was big news there, okay. We don't want, as PPI wasn't it on there Friday, okay. We don't want to be trading around big news, all right. We want to let that wash itself away, and forget about it, because there's for new traders, it's it can be very volatile. You might not know what's actually occurring there. But if we look at today, all right, what we're doing here is that if I look at right at the moment, what we're seeing is that it's only now is that the alligator, okay, there's lots of price around the markets there. It's only now that the price is basically into the alligator. The alligator's mouth is opening up, and then invariably what we've done is we've just broken that fractal there. So you'd be looking to see how that closes, and that would basically, be the start of a position in that way. So, I said, this is just a 30-minute chart, okay? I said, I normally would suggest that people start on a much higher time frame, right? Just so they can start to understand how the kind of chart plays out. That would be, that's a smarter move, I think, myself. Even if it's like weekly or monthly charts, okay? There are ways there that you're able to do that in particularly good trends, rather than sort of just trying to effectively, trying to trade it on sort of 5-minute charts. That's the daily chart, and you can see the price is just going sideways. We can see the fractals. See how many fractals are there along those lines? That price is just going sideways. We don't want to touch that until we start to see basically the price break the fractal as the alligator opens, and then you're running that. You're probably getting stopped out a little bit there, but you've still had a nice bit of a move down there. So lots there. I just want to just for the last couple of minutes, I just want to have a quick look at the charts as they open it up today. Okay, so we've got lots going on this particular week. We always want to have a look at how they're starting out for the week. We had kind of big moves there on Friday, right, last week. So there's lots of, especially in those US markets, lots of maneuvers there. And there's Bitcoin from earlier today, and most of the oils. Bear with me one particular second. Here we go. So, this is just an indices profile I have here, and what I was particularly interested in looking at is, that is the weekly chart, and this is we talked about how it had to get up above this swing point, which is a fractal. Remember, I was saying has to break fractals, didn't break it with any real particular sort of, vim or vigor there, nothing really terribly exciting there. You can see that the indicator is trying to print a fractal there, but remember, it isn't confirmed until this candle close, and this is only Monday. We've got this whole week to do, so that's in. Remember, but it broke it, but it's the price action wasn't exactly exciting, and we can see that actually what's happened is that the price rolled over from there, from having tried to break that fractal level. It's broken over, and shorter term traders will be moving away on that. So what I'm looking at here is, that is the Bush. That is, the Dow, which has moved down. The Nasdaq is stuck between the 20 and the 200 period moving average. Okay. If I look at the S&P 500, just to finish us off, is that the weekly chart. I've been saying we're pivoting around this big round number 4,000. Remember, I was saying sometimes it's very clear what the market's doing, other times not, and price was stuck between the 20 period moving average beneath the 50 above, just squeezing about. And last week, a bit like the Dow, it couldn't follow through. And so once again, we've got daily 200 period moving average here, daily 50 period moving average beneath, and price is just squeezed. And I think what will happen is that price will probably stay in that squeeze until we start to get the CPI data and we start to get the FOMC commentary on Wednesday. So yes, there will be some shorter term moves undoubtedly, but the bigger term moves I feel will not occur until we get that kind of American data out there. Okay, from tomorrow CPI data, and then FOMC Wednesday evening here, UK European time, with Powell's comments afterwards. So don't be surprised if we see the alligator is asleep for the next couple of sessions until we start to get that news out. So there we go, ladies and gentlemen. Unfortunately, we've run out of time. As they say, time flies when you're having fun. I hope that you've found that session today useful. I hope if you're a new trader looking at ways to get into trading trends, that maybe have a little look at the Bill Williams books, have a little look at chaos theory, have a little look at the alligator and fractals and how you could utilize them in your own trading. As I said, there's more to it in his own trading, but as a starting point, that is a really simple, good starting point to finish off. As I said, I just wanted to thank everybody who has joined us, okay, for our session here over the last few months, okay, for Monday Market Matters. This is going to be the last one for this year, okay. There'll be a little bit of a festive break, and we'll be restarting. I think it'll be Monday, 9th of January, London, 2 p.m. time. So until such time, I hope you have a fabulous, festive break wherever you are in the world. I hope, wish you all the sort of season's greetings. I hope you have a fantastic time. and use it as a time to reflect on what has been an interesting 2022 and what is undoubtedly going to be an eventful 2023. And I look forward to trading with you in the new year. Take care, everybody, and speak to you soon. Many thanks.